All right, so let's get started. This is Shane Handy with the Rational Trader. It is Saturday, August 25th. We're gonna talk about the volume profile based approach, which released for the NQ a couple of weeks ago, and we've been simming now in the ES for 2 weeks, and was released to users a week ago. Actually, there was a simulation running, or a replay running for those of you that logged in early. I was curious about something, so let's talk about let's do the NQ first. All right, so then we'll switch over to the ES, and then we'll talk about the DTN data feed, and then kind of the key thing I think that has to happen next. So this week in NQ did okay, not great, but not horrible. The previous week was terrible. The volatility was really crazy. I kept getting nicked. This week I went ahead and kept the 10-tick stop, and it didn't affect me too horribly. In general, though, I only see one real problem here, and that's with this case where the price straddles the value, the volume value area line. All right, so don't quite have a solution for that yet. I don't see it too terribly often. In general, I like the locations where I see the system doing that. This is like the perfect spot here. Here's a nick, which is really painful, but this is the perfect spot in my view to be looking to take a trade, either long or short. That prediction's even correct. It's just that the stop is too tight. Here again, you get a shot at it as you move through the value area high. I wouldn't normally take a trade here, but it makes sense to do it now, given that you understand that's the edge. This I like. You advance and then you pull back, and you know that there's a low volume area there. You need to come back a little bit more. Then it gets a little messy up here. Let's see. So all this looks good to me. That's a gutsy trade at the highs, basically, looking for the short or the continuation. And this is standard pullback here, and this is standard two-phase pullback, which it gets right. You have to try twice to get that. That one's early, and that's the one that gives you the move. So when you look at this here, when you look at yesterday, what was painful was that. So you could argue that the stops are still too tight for the volatility. That would be a very reasonable argument. The decision I made at the beginning of the week was that I was going to go ahead and try to stick with the 10-tick stop in 2 contracts, understanding that I might get nicked, but I kind of didn't want to give up that extra profit potential. I haven't run the replay with a 20-tick stop to see what the difference is. I'll do if I have time. I'll do it later. Looking at the daily chart, the average daily range is still really high. That's over 80 points a day. So that's good in one respect, and it's bad in another. The good is that there's movement, so there's nice moves to catch. Bad is that things are more unpredictable. The higher the volatility. I think something else to consider as well is we're continuing to flirt with new highs or make new highs, and so what's happened historically doesn't have an impact. I was thinking about sort of sort of 2 steps out strategically what to do with the machine learning, with the modeling and the profiling, and it occurred to me that it doesn't do you much good to look past at how the market has behaved at these price levels in the past when you're making new highs. So that's clearly not that urgent. nonetheless, so in general in the NQ, I'm pretty satisfied with what I'm seeing here. Some of this is just me deciding how to manage trades. How did the rest of this day play out here? So this is good. There's an opportunity down here. I like that. This is exactly the right place to be looking. And stay out of that. That's perfect. I couldn't ask for anything better. The thing to be thinking about, and I'm going to talk about this now at the ES, is that the nature of the algorithm that I'm using to define where to make a prediction is governed by how close you are to a low volume node. And that's not how I originally defined the price pattern behaviors. And so, like right here, I really think that I need to be making a prediction right there. I know the system's not, because you're in a place where you're looking for a turning behavior, not a pullback behavior. And so I think that needs to be revisited. So that's on my list of something to look at, and it's going to come into play in a minute as we talk about the ES, because this problem is more prevalent in the ES. So if I just blindly make predictions on every one of these bars, I'm not too happy with the results, because you're not taking into account price action. But the price behaviors, the price action patterns that I am using had a different idea in mind that may not be appropriate now, and so I gotta think that through. Particularly since I now know if there's a low volume node near or not. I know that, or the data knows that. So that's something to think about. Because you'd like to be. What we want is we want to get long here, but what I want is I want the system to be giving me a prediction off that bar. And I don't think it did, because it's looking for a turn here. So the turn behavior is right there on that bar, and now it's too late, right? You're too far away from the low volume node. So I got to think that through. So let's see what falls out of the ES discussion, and then we may end up applying that change over NQ or not. We'll see. There's another issue there that we got to work through here. So that we're going to talk about. So what you saw me do, if you logged in early, I was running a replay on the ES, because I noticed kind of that same problem on the ES, given the fewer ticks per point. So there's less opportunity to form a pattern that looks interesting to the system to do. And so what I did is I just changed it to give me a prediction on every bar, and it's not horrible. I mean, yesterday was in the ES was, I think it was down a point, so that's down 3/4. All right, so there's not much difference, but it's not, one day is just not enough to make a decision. And the problem is that it takes too long to run the replays. So we're going to talk about that in just a minute. But first, let's discuss kind of what's going on with the models here. So the ES model 2 weeks ago used an 8-tick wave. So the market has to move 8 ticks before the wave is considered complete. And I actually liked the way it performed last week, even in really bizarre conditions. This week I went with the more normal 6-tick wave height. By more normal, what I mean is we just take the bar height and double it, and that's our wave height. And so what I did is, so just based on this very limited sampling of two separate weeks, I built the model for next week for ES using an 8-tick wave. So basically what's happening is the the ratio of the bar height to the wave height is changing. Okay, and so I'll get, I'll live trade that next week. I'm also building a model through the March contract with an 8-tick wave height, so I can do replay testing starting, from June forward to give us a better sense for how that performs. As we've talked, the replays take so long that it's a struggle to kind of do what I like to do, which is explore through varying the parameters. If we look at this, let's take a look at this. Let's go back to yesterday, day before yesterday. That's overnight. Okay, so here's yesterday. Here's Thursday. Is this right? Yeah. Oh, this is Wednesday. Fine. This is fine here. So when I look here, let's just focus on this area right here. We're using a 3-tick range bar, and then we want to see specific price action behavior at a specific location. Now, what I'm concerned about is that because of the nature of the ES and it's thicker and it doesn't move, it doesn't have as big as swings in its moves as the NQ. What I'm worried about is that we don't see that price action pattern as frequently, particularly when we're confining it to a very specific location. So the locations here are low volume nodes, of which there are far fewer in the ES, and at the edges, at the value area edges. So if we look up here, what we see is I want to be making predictions up here, right? I want to be making this is exactly what this is the right location. So is this, for that matter, right? Either long or short. And my concern here is there aren't enough opportunities to actually make a prediction and get a trade-off. I can see right there, this is not a bad case actually, because right there I can see you'll be making a pullback short prediction. You'll be making a prediction because that's a pullback short. Nothing's going to be happening up here because that you're turning, and that this 4 straight bars down is actually, you might make a prediction right there. If we look right here, here's a good example actually of what I want to explore. If we look at this spot, let me get rid of all these lines. If we look at this spot here, instead of by price, by a range bar, and instead use like a tick chart, can we get more of a view of what's happening sort of inside these two bars, such that there's a pattern that helps you see, yeah, you might be, you're going to turn here or pull back, or this pullback is going to finish here. As it stands, it's not until way up here that you get a shot at it, and you only get one shot, you only get one prediction there, right? And what you really like is sort of all of these bars are involved. And so what I want to do is start exploring different chart types, different bar types for the ES, to see if I can get more opportunities at these specific locations. I like the locations that are showing up, given what we've done here, with that one caveat about straddling the value area line. but I feel like when we get to a low volume node, we don't often enough have a good opportunity to make a prediction there. Like right here, you only get one shot at it, which is right there, right? That orange bar is the only one where you make a prediction. And so given the noisiness in the market, if you don't predict there, then you've missed it, and now you're just waiting, right? Just like we saw sort of, well, actually you see it a lot. One of the huge benefits of the machine is that if you miss it, it doesn't go do something foolish and chase. It just waits for the next opportunity. So you want to try to maximize that opportunity. Let's see here. Okay, so where did my little agenda go? Yes. Okay, so so what's happening now is I'm building a model that uses the 8-tick wave with the 3-tick range bar for next week's live trading or simulated live trading, and then also for testing. So that model's built through, or is building now through June. I think it's June 7th. Let me see here. Where's it at? So it's currently at 90%. So it's getting there. And then I want to just run models, run replays through June forward. So June, July, August. We can get a full 3 months, right? Because we can trade the H contract using that model. The problem is a 3-month replay with this rather sophisticated compute-intensive volume profile stuff takes a really long time, more than a day, and that's a problem in general. The bigger issue is that it interferes with sort of the way that I like to explore. In that I like to make a change and see the impact of that change, and then learn from that, and then either put it back or change it again, or anyway, just experiment by tweaking variables. And because we're dealing with an environment that has a lot of randomness in it, you need a large sample size. So you can't just do that for a day or two. You got to do it for. I've always done it for a full 13-week period. And I can't do that now because the replays take too long. So the net result of all this is that I've got on the list now to write the program in a real programming language that allows me to do these replays much quicker. Okay. That's a non-trivial effort. And so it's gonna. I've been putting it off. I've kind of known I'd need to do it, but I wrote one originally to kind of when I first got started here, before I started doing formal replays in Sierra Chart. But it's no longer sufficient for given the level of sophistication we've added. So that's got to get done here fairly soon. Okay. So I'll start blocking that out and see what that looks like, see how hard that is, and what the parameters look like. The third thing here, or fourth thing, is I am building the ES. I'm building an ES model with data from a different data feed than the Infinity data feed. And that's this one here. This is the DTN IQ data feed, which is very expensive actually, but is supposed to be the gold standard. And so it's interesting because I took the Infinity data feed, and kind of the way you build these models is you can build a model from scratch, which means you initialize all of the weights to 0. or you initialize them randomly, and then it starts from there and finds its patterns. It just takes a really long time because you're starting from scratch. Or you can initialize the model run using last week's model, in which case you're starting off much better. So instead of starting at 0% accuracy, you're starting at more like 80% accuracy, and then it cuts the time down considerably. Typically speaking, when I take the ES model for this week and I initialize it with last week's model, I'll start off in the kind of like the 90% range, and then it tries to build to 100 is what it then does to incorporate that week's data. When I did the same thing with the DTN data, it was down at 55 or 60%. So there's a pretty dramatic difference in the data from the two data feeds. And the question is it better or not? Do you get a better feel? Or do you get a better read on what's actually happening in the market? And can we use that to our advantage? I'm curious if with the thicker market in the ES that we see a better result by using the DTN feed. So you're gonna start seeing that in action here. The next week, the instance up here in the upper left will be what you normally see. The third one will be running the DTN data feed. So we'll get a side by side, a comparison of the two in real time. And then I also built the ES model for testing. I built using the DTN IQ data feed. Now, if that proves dramatically better, that's a problem because everyone's using either Infinity. Most people are using Infinity's data feed, and some are using like Rhythmic, and I think that's the only other one. And so one of the things we had talked about was, well, if we see a dramatic difference, something that would be pretty attractive would be to have a centralized server that is running, that provides predictions that you would connect to, rather than having it all on your own system. So some other server somewhere, probably in Chicago, that's where I've installed everything and it's running, and all it does is spit out predictions, and all you do is ask for the prediction. You don't do it. Your computer doesn't do anything else. So that's the path that would get us there is one where this more expensive data feed is a lot more useful. All right, and that would be a way that you could avoid having to pay that, but still get the high quality. Okay, so that's kind of where that's headed. So we'll start the DTN IQ data feed next week live. The replays I'm going to be doing are using it, so we'll get a feel from there. And then the larger, kind of the big thing facing me right now is dramatically improving the speed with which I can get the results of a replay done. So that means I got to take it out of Sierra Chart, write it in a programming language, but make sure I get the same result. So that's the tricky part. And that's going to consume a fair amount of my time. So I'm gonna stick with what we just described, this NQ ES model development plan, and then while I work on this other program, that's going to consume a lot of my energy. I do have some things I want to do with the models themselves, but I think they need to wait now. because I think we're getting close to having something for the ES that I would trade real money with, and I want to lock that down. I don't want to get sidetracked and not do that by doing too much. Okay. So that's all I have today. Fairly short update, comparatively speaking. So any questions would be the time to type them in. So NQ, we're just going to continue to go here. Basically every day, every week, you got to make a decision. Am I going to stick with a 10 tick stop or go to 20? And that'll be listed on the screen. ES is going back to an 8 tick high wave, still with a 3 tick range bar. And then we're going to see the Infinity versus DTN live together because there's two separate models being built. And then there'll be model replay, ES replays going on for the H contract with data built through the M contract. And so I'll share those results with you as they come in. It'll take a while because, again, the replays just take too long. And then separately, my big task here is to make it to a point where I can get the replays done, in seconds rather than days.